Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, we want to discuss Best Buy. We recently had a 12% drop. This is going to be another opportunity to jump in. You're going to want to watch this video. So on September 25th, we did a video on Best Buy discussing how undervalued it was, and it was trading at 104 at that time. We gave it DCF value of 135 and we put it in our buy folder, and it reached it a lot quicker than expected. The second video here we did November 15th. I actually talked about closing my position on Best Buy because it was already trading at the time. It was trading at around 140. That stock gained about 28% on the trade, 105 to 135, which the DCF valuation was 128. So it exceeded the DCF valuation, and it was an overall great trade. But now Best Buy dropped over 12%, trading as high as 141. Earnings came out and it's now down to 114. So is this another opportunity to buy Best Buy? Is the drop an overreaction, or is it justified? What caused the drop? So there's an article here on the Motley Fool, and they discuss where there's been an increase of crime waves with a lot of markets during the holidays, and that companies are losing millions and millions because of these crime waves of thefts. And Best Buy is mentioned in there, Kroger, but that's not the main reason. The main reason was the growth wasn't as high as expected, and it didn't reach it by much. But I think because so many markets, so many companies are having such hyper growth during this COVID recovery time, when they only grew about 0.48% in domestic revenue sales, it kind of caused a panic. There were actually some analysts that dropped their target value. Citigroup, for example, was one that dropped it from 118 to 106. But there are some other companies that are still bullish, like BofA Securities maintain buy on Best Buy, raises price target from 157 to 175. This was on the 24th. And here's another one that dropped it. Jeffries, an analyst, he dropped it from 145 to 137. So how bad were the numbers? I mean, how much did Best Buy drop? Was this justified? Well, I felt like the price trading at 141, it was already at the valuation where I had it before. But I do think that overall, this drop was not justified, and it was just an overreaction. So the 0.458% revenue drop was less than anticipated. So they had a higher anticipation, and it didn't reach it by 0.48%. Earnings per share gained just 1%, which they expected more. And another reason that some analysts changed their valuation was because of the company's full year guidance. The full year guidance is expected to be between 16.4 to 16.9 billion, which they again were anticipating a little bit more positive outlook. But I think these companies are factoring in that as the post-COVID hyper sales start to decrease, of course, their revenues are going to get back to normal. But taking this company and looking at it from a sky view, if we go back a few years, I mean, overall year-over-year growth has been increasing. In 2012, they were making 45 billion, 41 billion, and they're back on those numbers as high as 47 billion, 52 billion. So they've been since 2017, their growth has been increasing every year. See here, starting 2018, they grew 6.97% in revenue, then 19, 1.7, 1.77, then 8%, then 14%. And if we also look at their earnings per share and compare third quarter, the last 2 years, their earnings per share is up about 84%. So I do think that this is a slight overreaction. Taking a look at some of their ratios, their current ratio is 1.13. Their long-term debt and equity is 0.78. So these are good metrics, and it shows that they do have control of their debt. Their PE ratio is 11.17. PEG is 1.13. Excellent ratios, shows that this company is not overvalued, has control of their debt. They're paying dividend. And if we look at sentiment, and that's one of the reasons I do look at sentiment, is because a lot of the analysts do have a lot of influence on the price. you know, major investors, if they pull their money out, the price drops. And there is very positive outlook for Best Buy. On this video here, you can find where I had the DCF. I think these numbers have not changed. When I put in their revenue, you see here in 2020 I put 1.8%. I didn't put major growth because I knew everything was going to slow down. I knew that COVID was a major factor on why some of these companies had such a sharp growth in revenue, and I factored that into my DCF. My DCF for this company hasn't changed. I still value it at around 120, and here I put 128. I'm not going to reopen a position. I want to see with the next few months and the talk of inflation and tapering, if that's going to cause maybe another dip. But if it drops below 104 or 103 here, then it's definitely a strong buy. And that's when I jumped in the first time. It was trading at 104.94. Anything below 104, if it can drop around below 104, 103, is a strong buy, with the DCF valuation still being around 128, 130. And if we go on tip ranks, we have here JP Morgan 134 stronghold. This was just iterated 5 days ago. So according to him, he's a 4.5 star analyst, 69% success rate, average return 12%. Pretty successful analyst. He's giving it a 134. Here's another 5-star analyst, 70% success rate, giving it a 150. Another 5-star, 137. So everybody's pretty bullish, and these are all pretty recent, all within the last week. They gave these evaluations. Wells Fargo here, 73% success rate, 125, and Keith 155 evaluation. So it does seem to be still a good stock to invest in. Best Buy's sales are still increasing every year, every quarter. They have positive revenue, and if you look at it from a far lens, over the years they've been growing, and they've been around for years. They've been able to overcome Amazon's wrath of taking over all companies, and I don't think Best Buy is going anywhere. Nothing's changed major fundamentally to cause this drop. For me, it's not a buy yet. I would like to see a drop below 104, but fundamentally this is still a strong company. I still expect strong growth, and I'm going to keep it on the watch. And thank you for joining me. Please subscribe, comment, and like, and see you on the next video.